What is going on, investors? Back again. Time to take a look at Alibaba Holdings Company, ticker symbol BABA. This company just reported earnings this morning before the bell. You see the stock is selling off a little bit, about 2% during the regular trade and during a week and a day where the stock market has just been ripping to the upside. This stock's got a 31 PE and a $760 billion market cap. So like I said, they just reported earnings. It was an earnings beat. It was inline revenue. Revenue came in 30% year over year for a company this size. That certainly is impressive. So let's just not waste any time. We'll jump into the numbers. We'll take a look at the cost. We'll take a look at a quick valuation metric, and then we'll jump over to the stock chart as well. So jumping over to the 3 months revenues, we've got 3 months ended here. They've gotten it in the local currency, the RMB. Forgive me if I refer to these as dollars, but we do have the US currency here, so that is the dollar. So they've got this commerce business here, and there's different layers to it. It reminds me a lot about Amazon, but they also have this cloud computing business. We'll take a quick look here. That is up 60% year over year. It's, you know, at a $2.2 billion run rate in terms of a 3 month period. So that's super strong. And if they can continue to grow it at this type of rate, that's going to be a big business here for Alibaba here pretty soon. But you take a look at the commerce business. So you've got some stuff, you got the retail, and then I like how they just break everything out. They got wholesale, they've got other things, they've got logistics and things like that. And they show you how quickly these are growing. And then you get down to a blended 30% increase on our total commerce revenue increase. We're at 19.2, call it $19.3 billion. That's pretty solid. You throw in the cloud computing, some digital. The digital is not growing as fast as maybe I would think. Maybe there's some things going on there in the Chinese market that leaves this to be competitive or just not something that Alibaba is competitive at the certain time. But we came in at $22.9 billion. Again, that is a 30% growth rate when you factor in everything. So, you know, their core business is growing at about 29%. The other businesses that they've got here are doing really well, especially this cloud business as well. Let's take a look how they're controlling the cost. I think that's something that you definitely want to see and see how well they're controlling these costs. And I think there's a little bit here that could be desired, but it's not that bad. Okay, you see here for the 3 months ended, we've got 19 over 20. We'll just come down here to total cost, and we went from 98 up to 141. Basically, we were at 83% of revenues here in the total cost, and now we're up to 91%. So that's an increase of 8% in terms of our cost. But there is a slight caveat to this. What I actually like how they break this down. Whether or not you factor this into your valuation of Alibaba is up to you, but they break out share-based compensation here, and they show you by function. So they've got product development, sales and marketing, and general administrative here, and they show you basically how much they've paid these people in stock-based compensation. Again, understand that share-based or stock-based compensation is not cash flowing out of the business. Now, they have to pay these employees one way or another. They're just having to pay them in stock. So it's another way to factor this in. So I want you to show you here cost and expenses excluding. So this is minus share-based compensation. You actually see that our year over year change on its percentage of revenue actually went down. So when you look at the dollar for dollar cost of Alibaba running their business, it actually went down a little bit, but it increased a little bit from a share-based compensation. So while costs have gone up, most of those costs appear to me to be absorbed on this stock-based compensation, which again, depending on how you look at it, could be a good thing, could be a bad thing. It's good that maybe they're not utilizing capital and cash for that, but you as a shareholder are likely being diluted by these shares going out into the marketplace. Those employees or those executives sell those shares, could create some pressure on the stock. Now, from a valuation perspective, I'm not going to I don't always do this, but I think from a price to sales, you can look at BABA as a price to sales because they have cloud, because they have e-commerce. It's a little bit like Amazon where it's tough to judge one business over the other. So I just look at sales just dollar for dollar, and you're paying about 10 times sales at the current time for Alibaba. Now we see traditionally back in 16, 17, and 18, this was a little bit more of an elevated. This company sold between 12 and we'll call it 16 price to sales ratio. Now it's gotten as low as right in this 8 range. So in my opinion, if Alibaba pulls back into an 8x sales, which I suppose is possible, to me, that if you're looking at it from a price to sales basis, this would be an attractive area in my opinion. Now, jumping over the stock chart, we'll talk about that level. I think if Alibaba dropped down to the level where I have this, probably would be close to an 8x sales, so it definitely would be a buy. But I just have this broader chart up. What I wanted to show you is this light blue kind of North Carolina blue line here is a 50-day moving average. And we see here, every time Alibaba gets underneath this by any significant level, sometimes it's rather significant, like these 2 times, what has happened to the stock? It's come back up and at the very least hugged along that line, if not kind of rallied up. We had a really big rally here. This was back last year. And then obviously we had these March lows like most stocks did. And then we've just had this massive rally. And then we'll take a look at what happened. We've just now started to pierce into our 50-day moving average. So let's zoom in a little bit here and see if we can't pick out some levels. Now, the level that just jumps right off the page and probably should be to you at this point, if you've played around with any kind of trend lines, is right here at, we'll call this 268 to 270, anywhere in this level. To make it easy, we'll just say 270. That's actually a little higher up than this trend line probably wants to be, but we'll put it at 270 just to give you a nice round figure to kind of target here. And so I like this area, this 270. We would have filled this gap here. It's the peak that we made here. It was resistance here. It was a breakout point here, acted as support here, and kind of a launching pad up here. So if Alibaba pulls back into the 270, right now we're at 288, so it would be still a pretty big decline. Who knows what's going to happen with the broader equity market? I know they're surging right now, but those things can change. Obviously, you guys know. So to me, that would be a lovely spot for Alibaba. It could also be a spot where underneath it you set a stop loss, because if we drift through this 270 mark, this stock is likely to channel into this box down here, down into the 250s. And I'm painting like a bearish case scenario for Baba. I think their revenues and their cost structure, everything looks really solid to me. I just like to get things on sale, okay? If Nike puts out a $200 sneaker, I'd sure as heck like to get it for 180 or 170, and that's kind of what I'm looking at here. Now we're hugging right here on this 50-day moving average, but take a look at what's happened. This thing is flattened out, and it could potentially turn negative, which would be a bearish sign. Although our MACD looks like it wants to try to bottom out here, and our RSI is certainly bottoming out as well. We got big volume here. Take a look at these big candles. We haven't seen candles this big in a while. So people are stepping in and buying this one. I think if you want to step in, maybe you've got some shares of Alibaba already, I certainly wouldn't mind adding to it a little bit here. Maybe you happen to buy at a little bit higher price. You can start your average down in here. Now, the other thing that might be happening is you bought Alibaba a long time ago. You bought it down here at $200 and you're thinking, well, should I add to it? Maybe you want to add to your allocation. In that sense, I think you could be a little bit more patient. We do have this gap that's right here that these candles kind of wicked through. And so it wouldn't surprise me if we kind of retest down in this range, 280 or so. Again, that's only about $5 to $8 below where we're at right now. So if you don't want to pinch pennies, I don't mind, jumping in anywhere in this level, anywhere on this 50-day moving average. As you saw, when we stretch this chart out, this is a daily chart out a long period of time, this stock really trades closely to its 50-day moving average, as most companies do that have such solid financials and such a track record like Alibaba does, and also a pretty large moat around their businesses. A lot of these big, gigantic Chinese companies have a little bit more connection with the Chinese government that allows them a little more protection than maybe like an American company would. So if you're comfortable jumping in there, I don't think we're at a bad level here with Alibaba. I think it could get better if this stock continues to sell off. It's actually one that I might potentially add to my portfolio. Personally, I'd only want to get exposed to maybe a share or two of this one inside an IRA account where I'm already overexposed to Amazon and a lot of US retail. Probably wouldn't want to go overweight, but it would be an interesting buy, in my opinion, somewhere inside this level. We'll call it right around 270. So we're getting there close with Alibaba. Hopefully you guys enjoyed that one. Got a plethora of videos coming for you later today, so stay tuned to the channel. We'll be back again soon. Good luck with your investments.